This portfolio of 3 high-yield dividend stocks will surpass your full-time job. Imagine waking up every month with $7,000 hitting your bank account without ever having to clock in for work. No boss, no overtime, just pure passive income flowing in while you live life on your own terms. Sounds like a dream, right? It doesn't have to be. With the right high-yield dividend stocks, this level of cash flow is absolutely possible. The best part? It only takes a one-time $10,000 investment to set the wheels in motion. In this video, we're diving into 3 powerhouse dividend stocks. We'll break down how each stock generates income, their financial strengths, and why putting them together creates the ultimate passive income machine. By the end, we'll show you exactly how a one-time $10,000 investment can compound over time into a portfolio that pays you thousands in dividends every single month. First up is CNQ. Let's dive into the first stock on our list, Canadian Natural Resources, often known by its ticker symbol CNQ. This company is a major player in the energy sector, specializing in the exploration, development, and production of crude oil and natural gas. Headquartered in Calgary, Alberta, CNQ boasts a diverse portfolio that spans across North America, the North Sea, and even offshore Africa. Their operations are super extensive, covering everything from oil sands mining and upgrading to conventional oil and gas extraction. Now, when it comes to investing in energy companies like CNQ, it's essential to consider the associated risks. The energy market is notoriously volatile, with factors like fluctuating oil prices, geopolitical tensions, and environmental regulations playing significant roles. Thankfully, CNQ has a hedging strategy where the company locks in prices for a portion of its production, reducing exposure to sudden price swings. Another plus side? As a smart investor, you can view these market dips as buying opportunities. Financially, CNQ has demonstrated resilience and growth. In 2023, the company achieved a record annual average daily production of approximately 1,332,000 barrels of oil equivalent per day, marking a 4% increase from the previous year. This growth was largely driven by strategic investments in their natural gas assets. As for their stock performance, CNQ has been on an upward trajectory over the past 5 years. This impressive growth can be seen from their metrics. Right now, it's offering a strong 5.18% yield, meaning you're getting paid well just to hold the stock. But what really makes it exciting is the growth. CNQ has been increasing its dividend at an impressive 13.76% per year, so your income doesn't just stay the same, it grows. And when you add in the potential for the stock itself to rise, analysts are forecasting about 10.53% annual returns on share price alone. That's a combination of cash flow and growth that can really build wealth over time. Now that we've covered CNQ and its strong position in the energy sector, let's move on to another high-yield powerhouse. EPD. Enterprise Products Partners, or EPD, is an absolute giant in the midstream energy world. Based in Houston, they operate a massive network of over 50,000 miles of pipelines. To put that in perspective, that's enough to wrap around the Earth twice. These pipelines move crude oil, natural gas, and natural gas liquids across North America, keeping the energy flowing from producers to consumers. But EPD doesn't just transport energy, it also processes, stores, and exports it, making them a one-stop shop for midstream services. Now, you might be wondering, how big is EPD compared to its competitors? It's definitely one of the leaders, but companies like Energy Transfer and Kinder Morgan have even larger networks, with about 90,000 and 70,000 miles of pipelines, respectively. Still, EPD stands out because of its strong financials and steady cash flow, making it a favorite among income investors. EPD isn't directly impacted by oil and gas price swings because it operates on a fee-based model. It gets paid for moving energy, no matter the market conditions. But that doesn't mean it's risk-free. One big challenge is demand fluctuations. If energy production slows, there's less volume flowing through its pipelines. To counter this, EPD has diversified into storage, processing, and exports, keeping cash flow steady even when one segment takes a hit. Financially, EPD has showcased robust performance. In 2024, the company reported revenues of $56.22 billion, marking a 13.08% increase from the previous year. Earnings stood at $5.90 billion, also reflecting a 7.70% uptick. This growth trajectory underscores EPD's effective operational strategies and its ability to capitalize on market opportunities. Regarding its stock performance, EPD has demonstrated resilience and steady appreciation. As of February 26, 2025, the stock was trading at $33.14. Over the past year, the share price has experienced a 20.99% increase. If this doesn't reflect investor confidence and the company's strong market position, then we don't know what will. When you move on to the metrics, there's no denying that EPD is all about steady, reliable income. It offers a solid 6.3% dividend yield. Even better, that payout keeps growing, with dividend increases averaging 4.74% per year. It's not the fastest growing stock, but it definitely gets the job done. Analysts expect the share price to rise about 3.33% annually, adding a little extra return on top of the dividend. It's a classic slow and steady investment, built for income, built for the long haul. We've seen how CNQ and EPD deliver strong dividends in the energy sector. Now, let's switch gears to a different kind of high-yield opportunity, this time a powerhouse in business lending. ARCC. Ares Capital Corporation, or ARCC, is a business development company that provides financing solutions to middle-market companies across various industries. Essentially, they offer loans and make equity investments, enabling businesses to grow while generating income for their shareholders. ARCC's portfolio included investments in various sectors such as media and entertainment, manufacturing, and more. While ARCC's individual investments might not always be household names, they have a diverse portfolio that showcases their extensive reach. For instance, they have invested in companies like 22 Holdco Limited, an international sports and entertainment platform, and 3 Step Sports LLC, a provider of integrated youth sports solutions in the Northeast. Similarly, investing in ARCC comes with certain risks. Economic downturns can impact the ability of their portfolio companies to repay loans, which in turn affects their earnings. To mitigate this, ARCC maintains a diversified portfolio across multiple sectors, reducing exposure to any single industry. They also focus on senior secured loans, which are backed by collateral, to provide an extra layer of security. Financially, ARCC has demonstrated solid performance. In 2024, the company reported revenues of $2.99 billion, a 14.38% increase from the previous year. This growth in revenue highlights ARCC's effective investment strategies and robust portfolio management. Regarding stock performance, as of February 26, 2025, ARCC's share price is $23.04. Over the past year, the stock has seen a steady climb, reflecting investor confidence and the company's strong financial health. The metrics also show that ARCC is built for income. It's paying a solid 8.25% dividend yield. When it comes to growth, the dividend hasn't grown. The good news is it has stayed steady, which is just as important for income investors. The stock itself isn't a huge mover, with analysts expecting around 3.24% annual returns on share price. With ARCC, it's not about rapid growth. It's about reliable, high-yield income that keeps the cash flowing. Before we put them together, let's compare. CNQ, EPD, and ARCC all offer high-yield dividends, but they make money in very different ways. CNQ is all about energy production. It pulls oil and gas from the ground and sells it at market prices, which means its profits can swing with energy prices. EPD, on the other hand, doesn't produce oil. It moves it. It owns pipelines and storage facilities, which means it earns steady fees no matter what oil prices do. ARCC, on the other hand, is in a completely different game. It's a lender, providing financing to mid-sized companies and collecting interest on its loans. Now, Let's create the perfect portfolio. Putting CNQ, EPD, and ARCC together creates a high-yield portfolio with a dividend yield of 6.58%, an annual dividend growth of 6.17%, and a share price appreciation of 5.70%. ARCC and EPD notably lead the way in pure yield, making sure your income is high from day one. As for CNQ, it's the growth engine of this portfolio. It keeps your dividends climbing year after year. On top of that, CNQ also boosts share price returns, adding long-term capital appreciation to the mix. Put it all together, and you've got a powerful combo of income, growth, and stability. Now let's talk about what happens if you invest $10,000 and let time do the work. After 5 years, your portfolio would be worth $18,300, and you'd be earning around $1,200 per year in dividends. That's already a solid boost in income. After 20 years, things really take off. Your portfolio would grow to well over $148,000, and you'd be pulling in over $12,000 per year, or a cool $1,000 per month. That's enough to cover major expenses or even cut back on work. But the real magic happens at 30 years. With compounding and reinvestment, your $10,000 turns into $836,000, and your yearly dividends explode to $85,000. That's roughly $7,000 per month, more than enough to fully replace most full-time salaries. A one-time investment, left alone, grows into a powerful cash machine. This is what true financial freedom looks like. There you have it, a high-yield dividend portfolio that can turn a simple $10,000 investment into a lifelong income stream. CNQ, EPD, and ARCC will work together to give you steady cash flow, dividend growth, and long-term capital appreciation. Remember, the sooner you start, the more you can take advantage of compounding. Ready to kickstart your investment journey? Do share your thoughts in the comments. Like, share, and subscribe to the channel if you haven't already, and hit the notification bell so you don't miss out on future tips.